And welcome out to Tackle Trading's Halftime Report, a daily stock market show where we break down all the news, the information, the action that we find interesting, compelling, and noteworthy so that you out there, our users and our viewers, can get insight from us as the coaches. A couple things we're going to be talking about here today. Jerome Powell gave testimony this morning, an interview where he talked about negative interest rates, the economic outlook, some of the problems coming up in the future. And the markets did not really like what he had to say. Technically, the market is definitely making a transition between certain sectors. I mean, tech is on a pullback, still looking like a bullish uptrend, but you've got financials under pressure. You have industrials under pressure, and you have a split in the market between the cool kids, Mark, and the other kids, no question about it. PPI, oil inventories, a bunch of other things
Oh,
as
it's a
well.
busy day. It's a lot going on.
Yeah,
It's a lot going
it sure
on.
is. And by the way, if you're watching our show for the first time, as you come in, just give us a subscribe, click the bell, make sure you get the word out. And if you're Team Tackle in the chat, hashtag Team Tackle, love seeing that hashtag out there because we are a community. Maddie, how you doing today?
I'm doing good, Tim. Excited to be here with the crew.
Yeah, me too. There's a lot going on in the market. And obviously, you now have two red candles on the S&P for the first time in about a week and a half, but we've been kind of neutral for some time. Mark, there's several things I want to get down to, but let's start with the technicals here. The ES Mat, if you're looking at that, you're below the 200 in a range, right? But when you go to the NASDAQ and you go through all the indexes, you do see a tale of different markets. Matt, can you flash through the four major indices and kind of just tell me what you're seeing?
Yeah, looking at this from a technical perspective, I mean, obviously, as Noah and I were talking about last week, we fully anticipated coming back up and retesting those highs from a couple weeks ago. We did that this week. And then it showed some relative weakness coming into the week in the market. And then obviously you see that double top in the market right here at about 29.50. And then the market shows some relative weakness coming into the last two sessions, breaking that 20-day moving average, showing some weakness coming underneath that in the S&P 500. When you're looking at some of the other indexes, obviously the strength in this market has been in big tech and the NASDAQ and technology in general. And what you're seeing right here is you're seeing a little bit of slowing momentum in the trend. If you understand potential average yield, you see increasing momentum to the top side. And then what you see is a little bit of slowing momentum from a trend perspective. And that's what you're seeing here is slowing momentum in the NASDAQ, holding that 20-day moving average in the NASDAQ. And really, even though it's showing some slowing momentum, obviously the NASDAQ is still, the strongest of the bunch, no doubt about that. Looking at some of the other indexes very quickly, I'm sorry for even clicking VIX, but looking at some of the other indexes, you're looking at neutrality in the Dow Jones. And from a Russell 2000, the Russell 2000 has showed weakness for, honestly, 2.5 years now. And we're seeing a little bit of weakness here today as well.
I think Matt just wanted to click the VIX.
I don't think we can move past that real quick. Matt, I think we need to go back to the VIX here for a second.
But one thing to note on the broad markets, though, we're living below the 20-day moving average for the first time since April 3rd.
Yeah.
So that 20-day, which is a very popular baseline indicator, we're below it for the first time in a long time. So I
give me a weekly real quick, Matt, on that S&P, if you can. On the intraday, obviously, we still have some major support down there in those levels around that 2750, 2770. You got different layers of support that are there. On the weekly, though, we're also seeing some real weakness here, Mark. And you banged right into that those two falling moving averages, and you've started to see some real change in this. I mean, just from a technical perspective, we'll get to the news here in about 30 seconds here, Mark. But what are you seeing technically on the broad market?
Well, I mean, technically, if you want to even break it down even more, is like right now on some of those key stocks like Apple, you're bouncing off uptrending hourly moving averages. You're having a nice technical bounce, short-term lived most likely in the last hour. As it's ugly right now on intraday charts. Intraday charts are hideous right now. It's a very, very critical market session for the next couple days, both from a technical level on those intraday charts, which are just ugly. And then from a sentiment level, I mean, you got a lot of retail traders out there that have been propping up this market. They're learning over the last couple of days that their trade can actually go down. And where the sentiment holds on those individuals, it's a big thing. It's a big thing right now. This is going to be a very critical session, the next couple sessions, on top of the million negative news headlines that we'll get into briefly.
Well, and part of it, I mean, if you think about from yesterday's halftime report until today, we've had two major intraday sell-offs. Matt, back down on a 5-minute chart. At the end of the day, we sold off pretty hard. And a lot of that was on Fauci warning about reopening the economy too soon and all that kind of stuff. And the market started to sell a little bit on that news. And then here, as the cash open happened, and as the markets in the pre-market started to move, Mark, we had Powell Testimony. Now, the headline I got from Powell Testimony, I didn't watch it, Mark. I did just kind of read through the transcript and the headline. He said that we're going to have an extended period of weak growth. Now, didn't we already know that? I mean, if you are a bull, couldn't you say, oh, yeah, we've already known that. Powell's already said that. Why didn't the market like what Powell had to say?
Listen, we've been talking about the Powell testimony. We talked about it with our pro members this weekend, how Wednesday morning could be a big event on a light week of earnings, a light week of economic news, trade war, Powell. These were the two things, and they've certainly come in. Starting with Powell, here were some of the key lines from his speech this morning. The recovery may take some time to gather momentum, i.e., all of you individuals looking for a V-shaped recovery in the economy. Powell says you're smoking one of the many marijuana publicly traded companies' products. He then said additional fiscal support could be costly but worth it. Translated, government, if you do not spend trillions and trillions and trillions of more money, this economy cannot sustain itself. Another line, the timing and pace of the recovery depend on the coronavirus questions whose answers are unknowable. Basically, translated, we have no idea when we're going to get a hold of COVID-19 situation in society. He then said the growing sense of a recovery will come more slowly than we would like. That there's a growing sense. Once again, this isn't going to be a short game. This is going to be a very long, painful economic. And then he says using negative rates is not a tool we're looking at right now. So basically, this speech was, things are terrible. We have no idea how long they're going to be terrible, but it's a lot longer than anybody thinks. And the only thing to stave off disaster is trillions of dollars of more stimulus spending. Mm-hmm. And we're not going to give you your negative rates. I mean, a total disastrous speech for someone from a bullish side looking for a glimmer of optimism, a glimmer of hope. It was a very dour speech. And on top of it, he said negative interest rates we're not going to use.
But why do they care now? I mean, first of all, economists have been projecting terrible data. We've seen jobs numbers come out absolutely abysmal, Matt. The economics behind this have been the worst we've ever seen. We've seen crazy, crazy data coming out of the economy. Powell's not exactly been positive in the past. So why sell this speech? What was it, do you think that he actually said? Was it the fact that he doesn't want to go negative rates, Matt? Was the market pricing in that they were going to go negative rates?
Again, I think the market was anticipating negative rates, yes. And obviously this throws a little bit of cold water on that. I also believe he's lying in every capacity. I believe he will go negative interest rates. I said this on in the Monday podcast. Mm-hmm. I said Powell's a hawk that is, and I said it in the halftime show as well. Powell's a hawk, but he's forced to be in this dovish position. And so in his speeches, he wants to believe that he is a hawk. He wants to come across as he is a hawk, but that's not what he's done in his history as a central bank president or central bank chairperson. And so in my opinion, I believe that Powell is telling the truth about what the current economic condition is, but he does not want the U.S. to go to negative interest rates. He is going to be forced to go to negative interest rates, i.e. through either economic situations or because the market throws a temper tantrum. And so that's what's happening today, in my opinion, is that basically the entire marketplace wanted Powell to assure that, we will do whatever it takes for the economy. but he kind of threw a little bit of cold water on that. Now, does that change my belief in what the Fed's going to do? No, it does not. I've heard Fed speeches throughout my entire career about we're not going to do this, we're not going to do that, and then they do it. I remember Bernanke in February of 2008 talking about how, you know, the economy's doing this and the economy's doing that, and yet they went to zero interest rates 6 months later. So in my opinion, yes, Powell is talking about the truth of what the economic situation is. We've seen that in the data, and we're going to get worse data coming into the second quarter. And I believe Powell knows that as well. But I also believe in his heart of heart, he knows he's going negative interest rates.
Mm-hmm. Do you think?
Yeah, well, no, and I talked about, Matt, at the start of the week, and I talked about it over this weekend. I was like, get ready for a stock market temper tantrum on Wednesday. I said, if he alludes to not going negative interest rate, you could see a stock market temper tantrum. So is this temper tantrum part of what's happening today?
A little bit, yeah. I would say that every time Powell or any Fed chairperson or any Fed speech in the market where they've talked about not supporting the economy, the market sold off. But the reality is, it's kind of like it's the political situation. It's the Elon Musk situation. They talk about it in general, and then they actually do it. They create this situation, and then they cure the situation.
Yeah. Yeah. I think the other part of his speech that actually is enlightening and part of what I believe the market is selling on as well is him calling on more fiscal policy, guys, when we don't know if they're actually going to pass that. The House is actually putting together another $3 trillion relief bill that is going to give money to some of the states and all that kind of stuff to make sure that they can forego and avoid bankruptcy. Also more money for, I believe, unemployment and things like that to help working families get through a lot of this. It's a Democrat side bill, no question about it. And the Senate's basically saying, no, we're not interested. You know, in fact, I don't even know if Mitch McConnell came out and made a statement about it, but well, from what I understand, Mark, the Republicans in the Senate don't want to pass further measures right now. Now, a month ago, there was this assumption that we would have unlimited relief. That's why the market started buying the rally, right? This relief rally, you got the Powell put, you've got government stimulus checks, no matter what happens. Does this throw some cold water if the Democrats can't get something across the Senate, Mark? I mean, does this throw the bull argument a curveball here a little bit?
Listen, we've been talking with our pro members for weeks about how the Republicans are not in the mood to spend more money. They have signaled this very, very, very clearly. McConnell did come out and say something about Nancy Pelosi's bill. Mm-hmm. Saying once again, another Democratic wish list of things. Mnuchin, I mean, you know, when Larry Kudlow and Steve Mnuchin are on point saying the same thing, which they were about a week ago, saying, let's see how this money spends now. We can wait on another stimulus. They're signaling what the White House wants, what the Republican Party wants. They want to hold off. Now, whether they should, they shouldn't, we don't care about those things. These are things to discuss from a political perspective at a virtual neighborhood barbecue. But if there is an unwillingness of the parties to spend money, this is not bullish for the market. This is another this market can't sustain itself. This economy can't sustain itself without massive stimulus. Powell said so this morning. Mm-hmm. So if you get now a hesitancy to spend money, that's not good. That is not good for the economy. That is not good for the market.
It's going to be interesting, Matt. Obviously, I mean, we talk about any political storylines that affect the market here in our shows. There's no question about that. And relief and stimulus bills out of this, if it does not get through, if they can't push more money into the market, wasn't that a key center of the bullish argument, Matty? You know, and they're kind of losing that now.
Well, it was, but at the same time, it's at what point, and I know this is a debate, but at what point do you have to say enough is enough?
Yeah, I'm with you. I know that you're a very conservative fiscal policy kind of advocate, you know, and you're worried about that. The money.
Literally last week, we just went over $25 trillion in debt. Mm-hmm. And I get the Mnuchin's like, yeah, debt doesn't matter. We're borrowing at zero interest rates. That's not actually true. We spent last year, I believe, around $600 billion on interest on our debt. That's $600 billion that we're not putting into the economy. That's $600 billion we're not helping families out. That's $6 billion that is going to for the most part, 38% of it going to the central bank, and the rest, and 10% going to the American workforce, and the rest to the rest of the world. So I get the argument that, hey, we need to do whatever it takes. I truly understand the argument, but in the back of my head, I'm like, okay, but at what point do you remove the incentive from people going back to work, number one? But at what point do you go into too much debt that you risk the reserve currency status? These are things that I get concerned about. So I totally understand, hey, we need to support the economy. We need to support people. And that's something I support. We should support people. But at what point do you remove incentives to the point where people don't go back to work? And at what point do you start risking currency? These things are macro things that are in the back of my head that, I'm very concerned about.
Yeah, I think anybody with any bit of common sense is probably concerned about the national debt going up and all that kind of stuff. But I do believe the market assumed they were going to print this money.
Well, that's fine. Everybody enjoyed the free money parade, but the reality is enjoy the taxes that you're going to have to pay coming in next year and the year after.
That's right. And inflation and all the other economic fallout from it. There's no question.
We're going to have to pay this one way or the other. Taxes and inflation. We're going to have to pay this.
Yeah. Yeah.
We might not have to, but our grandkids and their grandkids might.
Oh, Cody, I think we will. Like, we're already seeing inflation go up at grocery stores and other product lines. This entire philosophy of we don't have to reset the debt cycle over the last 20 years. It's really come to fruition right now.
Yeah. We did the feed the beast and starve the beast theory of Jim Rickards is, we've just been feeding it.
They will try to keep feeding that beast if they can here. Obviously, there's some discord there in between the two political parties, and whether we get another stimulus package or not, we'll have to wait and see. Markets don't like the action here today, obviously, and the markets are kind of turning over. Matt, just a quick peek at a couple of sectors to show the split in sector rotation. Give me XLF if you can. Ugly. Banks are ugly right now. Now, Mark, I know that you're interested in at deep depressed levels in some of the key big banks that you think will always get bailouts and preferential treatment. But that chart, Matt, is absolutely abysmal. And if Powell is talking about all the things he's talking about, that may not bode well for all these banks. Matt, and then take a look at communications, XLC. And that's just a pullback so far. Now, it's not a buy yet. And if you look at XLK, you've got the tech sector actually still holding the 9 EMA. So it's like, which market do you want to focus on? There are bull candidates and there are bear candidates. And that theme is even exasperating itself here today, even more so, Mark, don't you think?
Listen, and this has been a common theme for the last 8 trading sessions. We are seeing an absolute tremendous split between the cool kids, which are your big tech, which are your internet companies, which are your pandemic companies, which have been your fast food until today, which have been some of your healthcare plays, which have been your Home Depot and Lowe's and some of your preferred real estate plays. And so those are the cool kids. Those are the things that I look to build a bullish watch list when we get a trade set up on those. And then you have basically everybody else. And everybody else has been not having a good time at all. And this is for 8 trading sessions. The market, with very few exceptions over the last couple of weeks, is not trading together. It's not like a sea of green or a sea of red. Most of the time, it has been split between those preferred plays that people have gravitated to, led by FANG stocks, led by pandemic stocks like Zoom and Peloton and Clorox and Netflix and your Walmart and Kroger and Activision. Those are the situations that I'll look to do bullish trade setups moving forward because they're so clearly preferred by the market compared to everywhere else. Like why you would do a bullish trade on anything outside of those preferred plays where people love, I have zero idea. Zero.
Yeah, there are winners and losers in this market. There's no question. I mean, even looking at a heat map, I see like Amazon is up today and Procter and Gamble and Walmart, coronavirus lockdown plays while the rest of the market is a sea of red. Let's keep working through the top side of the market here, Matty. Give me crude oil if you can.
Well, very quickly, looking at
Sure.
these sectors, I mean, one thing that is really kind of standing out to me in these sectors is you're seeing a lot of sectors break daily support levels. And that's very concerning for the market. You're looking at materials right now. And again, we're still in the middle of the trading day. Nothing has been confirmed yet, but you're looking at materials breaking $50. Communications on a nice little pullback. You're looking at energy, showing a little, trying to hold that 20-day moving average, still forming that high base. You're looking at financials. The financials are just weak beyond weak.
Bearish.
I mean, and I said this to Mark earlier, anybody looking to pick up a financial stock right now is making a mistake, in my opinion. Very, very weak, and price should continue to go down.
I just sold another naked put on USO.
Well, I wasn't talking about USO. I was talking about financials. But
I know, but whenever you're bashing on something, because I mean, I want to get into banks, but I can't even justify.
USO is not oil, so
I know I can't even justify doing one. Just to
I don't even know. I don't even know what you're selling a naked put on, to be perfectly honest with you. And neither, and quite frankly, I don't think you know what you're selling a naked put on.
Yeah.
I'll give you one financial.
No, 100%. USO is not oil. So when you're selling something on USO, please tell me what you're selling it on.
Well, it's a series of futures contracts on oil. So
okay, so you're selling the hope on somebody else.
I wasn't even making a point on USO.
Recalibrating some other futures contract.
My point was,
you're betting on somebody you've never even met before.
Oh, listen, my USO naked puts are doing just fine right now. But my point is that as much as I want to make fun of you and sell a naked put on banks, and being a bottom feeder, I can't even justify it on banks right now because they are so hated right now by the market.
Well, it should be hated. Please tell me how a bank's going to make money right now.
I love bottom feeding, but man, this sentiment is overwhelming and has been overwhelming for 8 straight sessions.
Sure.
People hate the financials right now with a passion, with just an absolute passion. I mean, Wells Fargo is at, and once again, this is the kind of thing that normally gets me excited as a counter trend trader. Wells Fargo is at like a decade low right now. You couldn't have picked up Wells Fargo at any point in the last decade cheaper. And even I right now, I'm like, yeah, I still can't do it. Because I mean, that's how bad they're hated and how ugly the situation is. Is like a bottom feeder, I can't even pick them up at a decade low because I'm like, not yet.
Like I told you many times on USO, you'll get a much cheaper price on the financials as well. But when you're looking at industrials currently breaking support levels. When you're looking at technology, a little bit of a pullback, kind of kissing on that 20-day moving average. When you're looking at staples showing relative weakness. When you're looking at real estate breaking support levels yesterday, confirmed underneath that daily support level, moving averages starting to push down. When you're looking at utilities, threatening a confirmation of a bearish breakdown right there. When you're looking at healthcare, just kind of stagnation, neutrality. When you're looking at discretionary, threatening to break down. So you're seeing relative weakness in almost 9 of the 11 sectors right now. Obviously, communications and technology just showing a little bit of a bullish retracement. So those are the areas of the market I would look at.
Yeah, I'm with you. And which area you find the most interesting on the bear side, I guess could be up for debate. But God, there is just a lot of charts that are breaking down there. Great, the analysis on that, Matty. Let's move through the other top end of the market. Give me crude oil. Obviously, I actually thought very, very interesting, very important report here today would come out, Mark. And you had the EIA numbers, the inventory numbers, and what did we see there for the first time in months?
As an oil bull looking to build a position, it was an amazing report. There were 2 aspects of it. First of all, we broke the trend of inventory build that's been going on for what seems like my entire lifetime. Seems like we've been building, I mean, it's only been like 18 weeks or so, but as somebody who's actively involved in oil, first time in like a billion weeks that we actually declined. Second thing that was really interesting to me was that the Cushing storage numbers actually went down by about 3 billion barrels, taking some pressure off of another cataclysmic event in the oil futures coming up when the June contracts expire. So really from a long-term trend perspective, starting to kick in those massive supply cuts that we've had. Now, oil's still not out of the water. Particular oil equities don't like at all in this environment, because until the demand side picks up, you could just see stagnating prices for a long period of time, which isn't good for oil producers. But you have seen nothing but positive trends on the supply side for about 8 weeks now, as companies are just massively shutting down oil wells. Not good for the economy, certainly not good for the employees in that sector, many of which have or will be laid off. For oil prices themselves, it does point towards stabilization in the short term.
Yeah, until we break out, though. I mean, it's not a bullish thing; it's a stabilization argument, isn't it? I know.
It's a complete stabilization argument.
Stabilization, I get. I would have thought maybe oil would have tested a breakout here, guys. I mean, we had the first draw since January 23rd on oil inventories. You know, just on that alone, you would have expected a little bit bigger of a pop, but maybe this was already priced in, I guess.
Oh my God, I want to like throw my head against the table right now.
Get mad at T-shirt. It's priced in.
Well, I mean, you got really negative sentiment over the last 24 hours.
Today.
Yeah, I mean, over the last 24 hours, people are very sour, in a sour mood across all risk on environment, right? So that's probably playing into oil prices more than anything today. But from a fundamental perspective, that was a great stabilization report. Feel more confident than I have ever, and I felt very confident in oil stabilization of prices. How you want to play that, that's up to you. I know my preferred ways, but it does look, Goldman Sachs backs it up. Their thesis on it, similar to the ones we've been
Goldman
spouting.
Sachs has every argument on every single thing, so they can call themselves right.
Yeah, well,
I click on a.
Let's stop using Goldman Sachs to justify your argument, please.
well, it's their most recent argument on oil. You know,
They've
so
had an
it's their
argument every other day for the last 3 months.
But yeah, so stabilization, how do you want to play it? Like, oil's under pressure, like all of the cool, I mean, oil is not one of the cool kids, make no mistake. They're not tech, they're not internet, they're not pandemic, they're not Clorox, they're not gold, they're not fast food, they're not one of the cool kids. They're on the other side. They're hanging out with those dirty financials, right? Those dirty financials that nobody wants to dance with. They're hanging out with the distressed plays like MGM and CCL. They're hanging out with, you know, the industrial companies right now. So they are not in the cool kids. Play accordingly. Don't expect robust price movement until you see the demand side pick up. But I like, out of the stoner kids, they're some of the ones I like the best.
Yeah. Yeah. Well, I mean, price is not obviously coming through in the short term here. It needs to break that range one way or the other. But if you are a gold or an oil stabilizer, cash flow, or a bull, you have to like the fact that you're not seeing any selling here in the last 7-8 days, Matt. I mean, there's at least that to hang your hat on. You're seeing doji candles for the first time instead of massive candles and crazy volatility.
Well, like I said, a couple of days in the halftime report, you know, on Monday, I said, you know, oil and the market needs something. You know, when you've had this type of recovery in a short time frame, you need something radical to really kind of drive it to a higher price. And, you know, we've been talking about, you know, stabilization in the supply versus demand in oil for 2 weeks now. So it's not like this is a shocking thing to the market. The market understands that. And when you drive from $10 up to $25 in the short term, you need something significant to really kind of break that out of its trading range. And, you know, even though we got the EIA numbers today, you really kind of just kissed off that $26 number, where you've seen old resistance over here, resistance yesterday, again, resistance today. So, you know, I do think you need something more than what the market already expects to kind of drive oil back up to that $30 range. And today we didn't get it. But also, I mean, relative weakness in the entire marketplace, oil is going to show that as well.
You know, and I've been in the camp for a long time. I'm waiting till next week, no matter what, to do anything with oil. I personally, just my own assessment of the risk mark. I know that there's a lot of anecdotal evidence that we're not going to have that same kind of experience and negative pricing and whatnot. And maybe the market's already started to wrap their head around it. Supplies are up in that, but just let the options expire. Let the June contract expire, and then I'm going to have a much different approach to this market. But that's my own take on the risk side of it. Real quick, take a peek at gold and the dollar. Not much there on the charts. We don't have to spend a lot of time on them. There's nothing there in those markets right now. Gold holding that 1,717 level, holding support. Currencies, the US dollar just seems like it wants to sit at $100 on the index. It has not broken out of this range now, guys, for 6 weeks, and there's nothing really there. But give me Bitcoin here. And real quick peek at this Bitcoin chart. And you can do GBTC or even slash BTC, either one. And I just got a message my internet was unstable. So I don't know if you guys still got me okay?
You're frozen. You have this stupid look on your face.
It must be all around because my internet's kicked me off 3 times now.
Oh my gosh, I need to copy that screen picture of Tim right now because that's priceless. I want that picture, you know. Oh, here he comes again.
Does that work?
Hey, Matt, well, your face isn't back, but Matt, you know, you weren't here, but I joined Tim on Team Bitcoin recently. So I am now on Team Bitcoin.
Matt's on too. Matt's on. Did we?
I said interesting. I'd like to hear your argument.
Well, listen, I don't know. Like, there's things I do on a short-term basis trading, right? And there's things I do with a long-term portfolio. I read Paul Tudor Jones' thesis essentially on Bitcoin. I totally buy into the inflation. I don't think the Fed ever, I agree with you. If Powell can say what he wants today, eventually he'll go negative interest rates. The Fed's going to be relentless in their support of this market. I don't know how we get out of it economically without trillions and trillions and trillions of dollars spent out of government. I'm looking for inflationary vehicles. For me, that store of value is not tech.
I would like for the first time in human history to have somebody make a data-driven argument about how Bitcoin's an inflationary asset.
It's the sentiment argument for me.
No. I want a data argument. I don't want an opinion argument.
No, well, I don't have a data argument because it's all
there is no data argument. It's what and this is what drives me crazy with Bitcoin and people who say it's an inflationary asset. They just say it. There's no data there. There's no historical data there.
Go listen to anybody arguing Apple right now. I've heard 2 financial analysts in the last week say valuation doesn't matter on Apple. That is essentially, it is a store of value.
Let's think though. Again,
we're breaking up there, Matt.
Again, I get the opinion. I understand the opinion, but somebody who is a Bitcoin expert, please tell me a data-driven argument about how Bitcoin is an inflationary asset. They can't make it because it exists.
Well, but I feel that the sentiment is building. And so once again, because I'm cheap, because I'm cautious, I'm waiting for GBTC to pull back. I was hoping that the halving gave me that opportunity.
You have no clue if Bitcoin's cheap or expensive.
Well, no, but we don't have that on anything right now, right?
No,
Apple,
we do. We have PE ratios and PEG ratios and valuations and the Schiller.
We have no idea what they are right now.
We have earnings reports and EPS numbers and revenue numbers and guidance numbers that we can make an argument based on. And I'm not the anti-Bitcoin. I come across as the anti-Bitcoin guy, but Tim, I was the first one of us to adopt Bitcoin. The first one of us in 2013. I was the first one. But I'm not going to sit here and listen to people, and I see this all the time in the Twitter sphere, and I see this on social media constantly about how Bitcoin's this, gold-like digital asset class that protects against currency. And once again, I never heard a data-driven argument. I've heard only people say it's an inflationary asset without any data in any capacity.
Well, Bitcoin are priced against fiat currencies. So if you print massive amounts of fiat currencies and the value of fiat currencies drop relative to assets.
There's no correlation between the dollar going up and Bitcoin going down, or dollar going down and Bitcoin going up.
But fiat currency in general. I mean, cryptocurrencies are priced against fiat currencies. That's how, I mean, that's how they derive their value,
Hey,
right?
Okay, so you
Tim,
own
how
more
does it-
gold. All right. Okay, that's your
how
argument.
does it feel, Tim, to have someone on your team finally?
I don't
Yeah,
trust
the
it.
team of hope and want, no data. Yes, okay.
Well, that's what everything, Apple, we don't have any guidance on Apple. We are totally in the dark, but sentiment drives Apple up regardless because people view it as a store of value. I don't think
You know
that
what also
sentiment
drives Apple up? Increasing revenue for the last 12 years. That's what drives Apple up as well.
Listen, I'm basing in a drip Bitcoin drops. I'll pick up some of that stupid GBTC. If that GBTC had naked puts on it, which it doesn't, which I hate, I'd have already sold a naked put at lower levels on it. I think the sentiment's there to stay, and I think it's a multi-year thing.
Yeah.
I think it's a multi-year thing.
Well, even just from a technical
Again, based
perspective.
on what analysis?
Just based on the real sentiment. I mean, that's what it is. Like,
So Matt, you're not on the team yet. You're not team Bitcoin yet.
No, with Mark going on Team Bitcoin, it makes me want to go anti-Bitcoin even more.
So
I mean,
listen,
and I'm dead serious here. Mark, you're not a crypto guy. You've never been a crypto guy. You don't understand the cryptocurrency in any capacity. And neither do I. But all of a sudden, we're saying, okay, I'm Team Bitcoin because it's an inflationary asset because we heard two financial analysts talk about it.
I'm saying because it's perceived as an inflationary asset.
It's perceived by Twitter and Facebook as an inflationary asset.
I don't think there's a hype train on it. In fact, I think the public has got off Bitcoin, don't you?
Yeah, I know. What the trend on the sentiment isn't the public. It is financial institutions that are starting to get on board with the argument. That's the sentiment I'm talking about. It's not the public.
2018 when Bitcoin went from 20,000 to 3,000.
And now they're starting to buy argument. Listen, sentiment.
There's nothing that triggers me more than Mark getting on Bitcoin. There's nothing that triggers me.
Well, we could try. We could bring up the VIX. We could say everything's priced in. There's a couple things that we.
I don't know. Mark going on Bitcoin.
It's like a light switch.
I mean, Matt is living in a nightmare dystopian world. Economic reports don't matter. Earnings don't matter. Bitcoin is now an inflationary asset.
They've pushed our national debt to 25 trillion.
It's all modern monetary.
I'm the Warren Buffett of the tackle trading community. Yes.
Matt is losing his freaking mind. Losing his mind.
I will always be a data-driven analyst. I will always be a data-driven analyst. I'm not going to have an opinion-driven analyst. So I understand the hype train. I get it. Totally understand it. But data is going to matter to me. Economic reports are going to matter to me. Earnings reports are going to matter to me. The analysis behind the prediction is going to matter to me.
Forget whether it's inflationary
or not. I'm not going to sit here and just say, I'm going to buy this because some analyst at Wall Street thinks it's a good thing. Data matters.
Well, what about the basic argument?
Data will always matter long term, always.
What about the basic argument that they are printing massive amounts of fiat currency around the world?
It has nothing to do with Bitcoin. Nothing.
It's the number one non-fiat currency.
Nothing. Bitcoin has changed the dynamic of how that currency was. I mean, Tim, the number one thing people wanted to buy Bitcoin back in the day was the anti-fiat currency, but they have found ways to create even more of that currency over the course of the last 4 or 5 years. So I don't understand the argument. I really don't.
Yeah.
I just want to make money. That's all I care about. And I think there is a strong case that the sentiment for Bitcoin is going to be really, really strong. So if Bitcoin gets a pullback at some point, I'm in. So
yeah, what's the pullback in Bitcoin? 30, 40, 50%?
No, I don't think it has to be. It's not going to have to be that dramatic for me to get in.
Why? Because that's the history of Bitcoin is the pullbacks are 70%.
No, but when you analyze the pullbacks at Bitcoin, they're usually okay. There was the big one that fell off, right? I mean, off out of when it hit 20,000, and then it just became a technical avalanche to the downside. The most recent one, Bitcoin got sold off like gold did. It was this big risk off, sell everything, and then what's Bitcoin done? Doubled.
Nothing.
from that point.
Bitcoin's
So,
history is in the last 10 years, it's had 3 pullbacks to 70% or more.
Yeah.
so
And you and I,
in Bitcoin,
you and I are not on the same team on the price on that. I wanted to break out of 10,000. Forget a pullback.
but
Give me
you're a
that breakout.
freaking dirty momentum trader.
All right, guys, that's our top.
You don't trade pullbacks on Bitcoin. You trade the breakouts, and on Bitcoin you
Well,
don't buy it
you
on
trade
a 10%
them, yeah,
dip.
but like,
You buy it on a 70% dip.
I think Mark wants to
Oh.
invest. Get a few
no,
percentage.
I'm
Yeah.
talking about an investing thesis, right? Yeah, trade a breakout, trade anything. Right? I don't care what it is, trade it.
Yeah.
Take my recommendation for what it's worth, but you should wait for a 70% drop in price before you buy Bitcoin.
I don't
That
think
would
it's
be
going to happen.
very
It's happened 3
significant.
times in the last 10 years.
Mhm.
Yeah. So
All right,
plant the
guys.
flag, Team Bitcoin.
That is our market skyline. We're now going to transition into our stock talk section where we talk about individual companies and things that are in the news, grabbing our attention, all that kind of stuff. A couple things today. Number one, that I do want to kind of promote and talk about. Number one, we have a webinar tonight at 7 o'clock Eastern. In fact, in the chat right now, type in option adjustments webinar. I asked Coach Noah to teach a concept that he's very popular for teaching and does it a lot in our lounges and whatnot, where he takes a long option and converts it into a spread trade. And he's going to be doing an options adjustment webinar at 7 o'clock Eastern tonight. Type that in the chat so I make sure we get the word out very clearly to everybody in our community. And then also, Coach Tyler made sure to ask me to promote his mastermind group tonight. And I believe it's the cash flow condors he's doing tonight, Marky, for the rut.
Yes, doing cash condors tonight for your condor traders out there. He's going to do, he always tries to do it that Wednesday right before expiration, right? So that if there's those last second trade adjustments you might have on a condor that's on the fence or looking to place those ones 30, what is it? How many days do we have to June expiration right now?
Oh, that's a good question. I
We
know
got
he always
37 days. We got 37 days. And so like that 37 days for option sellers, for credit spread sellers, oftentimes is one of those sweet spots for that. So he goes over that aptly timed webinar for those cash flow condor people, 8:30 Eastern tonight.
And Tim, there's one of the best trade setups, adjustments, whatever you want to call it, is when you have a nice little technical, signal, whether it's a retracement or a breakout, and you want to take a little bit of a stab, right? And you add a little bit of a position to the trade, and you say it's 2%, whatever it is. You add a little bit of position to the trade on the breakout or on the retracement. And then instead of locking in profit, which loves lock profit, Coach loves scaling out of a position to kind of reduce the risk, to have like a little bit of a free trade going on. And instead of doing that, what Noah is going to teach you guys is how to sell a call option or sell a put option, depending on the spread, depending on the direction of the trade, how to sell a call or a put to reduce that risk exposure so you can still have that trade go on. It's a wonderful, wonderful trade adjustment strategy, and I'm looking forward to Noah teaching it.
Yeah, I'm excited for it as well. All right, let's talk some companies here today, guys. Mark, there's been some interesting action in the debt department, in my opinion. Disney, I read a headline, they're trying to raise $11 billion in long-term debt. Give me Disney if we can. This is further evidence to me of something, but I'm open to you guys' take on it. Disney still knows they got a lot of trouble. Or is it maybe that money's just cheap and why not borrow it? Mark,
Listen, companies are borrowing just in the last 24 hours, the headlines I saw. In fact, this was just this morning. Uber trying to raise $750 million more. They burned through that in about a day, right, at Uber. So they need that's a Thursday on how much cash they burn. Royal Caribbean trying to raise $3.3 billion in 3 and 5 year notes. Live Nation, what's the common theme here? All industries that people, Disney, as you mentioned, industries that need the economy and the virus to go away, that need people, these companies, and they're getting slaughtered yet again today, doing everything they can to raise money. In fact, short sell triggers were triggered on Eat, Cake, AutoNation, Planet Fitness, Under Armour. just in the last 24 hours. That 10% down trigger
Mhm.
the short sell rule. So these companies are getting beat up. There's zero faith in them. There's a little fear, and they are realizing, well, they know they're run by very smart people that have been around, that they got to raise a lot of money for survival, and they're doing everything they can to do just that.
Well, and when I hear Disney borrowing money, I'm pretty confident a company like Disney is going to pay any money they borrow back, obviously. But when I hear other companies you just mentioned borrowing money, I couldn't be confident that's going to happen. And now the Fed just started buying these corporate bond ETFs just yesterday. I don't think we know the webs we are weaving right now from an economics perspective. And all this borrowing, it just makes you scratch your head and say, what's really happening here? I mean, Matty, when you read headlines that Disney needs more money, does that get you interested in Disney at all?
No, it does not get me interested in Disney. It makes me actually think Disney's really, really, really weak right now.
Mm-hmm.
And I saw the headline the same way you did, and I took it as a negative.
Yeah, me too.
So, Matty, can you sign off on a 65?
No, I can't sign off on anything they can put. You're going to pitch me.
$65 on Disney?
No, you're capturing like less than 1% to take on risk to the downside. No, I can't. But in terms of, these companies bleeding cash, Tim, Disney borrowing $11 billion is not the same way as, say, an Uber or a Netflix, who are already a debt-driven company. You're talking about a value company, a traditional company, a staple company, talking about borrowing billions upon billions upon billions of dollars. So it's a very negative headline, in my opinion, when, let's say Apple comes out tomorrow and Tim Cook says, hey, we're going to have to borrow $25 billion to cover costs. You're like, oh, Lord Almighty. I like, why? Like, why Apple? Same thing with Disney. When Disney comes out and says, we need to borrow $11 billion, it's like, oh, wow. Okay. Why? When Uber bleeds $9 billion in a year, you're like, okay, par for the course. But it's and I know it's not a fair comparison, but it's the difference between value and growth. When you have a growth company go into debt to build their business, that's kind of commonplace. When you have a value company have to go into debt to maintain operations, that is a very different story.
Mm-hmm. Yeah. And these headlines definitely concern me. By the way, same thing with like the cruise lines. I mean, they've been trying to borrow money. You look at the cruise lines right now, just give me RCL if you can. And Mark, these companies that are going after this type of funding and everything, it doesn't mean they're out of the water by any stretch of the imagination. In fact, probably the opposite. Breaking off of that moving average, showing me weakness here. Some real ugly charts in some of these areas that we know have been impacted directly and from some of the most areas. And, I don't think that's going to stop, by the way. I think that will continue. Tesla, next one here. Elon has been in the news, and I went and listened to him on that podcast, Matt. Man, I got to tell you, I was just impressed with his tone, his information, and that podcast in general. I love Elon, but I understand he is a very polarizing.
I get it, but he talked about some crazy stuff too.
He's crazy. He'll take you out into the deep water. There's no doubt about it. I mean, he's the guy that.
Is he a stable genius or is he an unstable genius? Because he's a genius. He's
probably unstable. He's probably unstable. Genius. Yeah, unstable.
By the way, I found the interview with Joe Rogan last week fascinating.
It was. Absolutely, it was fascinating. And, he threw a fit this week, basically saying that, guys, I'm going to open my factory. If you want to put me in jail, you want to find me, do whatever you want to do. I am not going to put up with this anymore. I'm going back to work. And California, one of the counties there that he's got that factory in, said, listen, we're going to be giving you guys the options to open within like a week or so. And so that seems like they are capitulating a little bit here. Now, it's not just for Tesla. They're going to open up other areas of this. Here's my question. Does Tesla have liability if somebody gets sick at the factory? Are they going to close it down again? I'm all for reopening businesses. I do believe in that right now, guys. And I do think you've got to give people the choice to go out and open their doors and get back to work. But does that business take on the accountability, just like you would with an OSHA complaint or a workforce complaint or whatever it is, of continued public health risk? Matt, what are your thoughts on that?
Your capitalistic heart is so cute. No, I mean, the government is going to come out there and they're not going to allow people to sue businesses for reopening up and taking on the risk of the virus. It's not going to happen. Whether it should or not, that's a different debate, but the government's not going to allow that.
What about worker rights standards for like, PPE equipment or whatever it is?
2020, this is not 1920. The Teamsters aren't as powerful as they once were. And again, I don't say that as somebody who's anti-union. I'm actually pro-union. But unions over the course of the last 40 years in this trickle down, top down economics, neo-capitalist economic philosophy, however you want to put it. This is all about the corporation, and no, the government is not going to allow people to sue over healthcare situations based on the virus. It's not going to happen.
They got to provide some health safety measures and equipment, don't you guys think? I mean, this is common sense to me.
Well, common sense and political, philosophy is different.
Marky, I mean,
do you really think the government is going to allow people to sue corporations for opening up regarding the corona situation?
If they're complicit in not keeping health standards safe, I do believe that you will have suits. Yeah, 100%. I mean, if you don't provide kind of disinfectant,
suits, they'll get thrown out.
I'm not so sure. I mean, if it's found that factories are not cleaning, if they don't provide, disinfectant, if they don't provide the equipment necessary.
What percentage of small businesses in America or corporations in America are going to have somebody get the virus over the next 6 months?
Almost all of them, right?
Okay, then you're never going to allow corporations to get sued in that environment. It's not going to happen. Again, I'm not arguing the right or wrong of it. I'm arguing the practical matter of it. It's not going to happen.
Mm-hmm. Marky, what do you think? I mean, and I actually think what Adam says here is very common sense. Only if the company is grossly negligent. I agree. There's got to be some standard somewhere there as well, though. I mean, Mark, the reopening is going to happen, right? Elon's pushing it. He's bringing it into the forefront. And quite frankly, I'm a believer that you should let people go back to work. They got to be able to make a living. If the government will not provide, then you have to let them be able to pay their mortgage and their rent. So what's your read on this whole situation, Mark? You think more of Teslas are going to just open back up and start going back to business?
Well, I mean, the only thing I care about from a market perspective is, I mean, because once again, the moral aspect of it, protect your workers. I am very pro-union. I think that there's a chance that unions really strengthen in this, especially if there's dead bodies, right? They have a really huge moral card to rally their troops and push for a pro-union agenda. But it's the dead bodies aspect. If there are people, and we've seen this in meat plants, 20 plus meat workers have died. If you start seeing dead bodies in places, it's going to be really, really interesting to see how that plays out on a societal level. There's a lot of downside to companies in that situation. If Tesla has to close down because of mass infections and people dying, all of a sudden there's a lot of blowback on that, right? From a societal level. It could be a very divisive issue in our society. It undoubtedly brings extra costs associated with it. Now that might not matter to Tesla, who burns through, the amount of money they do, but to a margin company like a Procter and Gamble, to a Tyson Foods, are they going to be supported by the government in those increased costs? I mean, Amazon told us they told us that this issue is a serious one. They said, don't expect us to make any money this quarter. We have a tremendous increase in costs coming forward. Basically, anybody with employees on a floor, that cost is going to be there, and it's not bullish, on the profit. So it's very, very concerning on multiple levels and has almost no upside to it at all, unless the government comes in and says, we're going to subsidize the extra costs the business have to make sure that workers have a safe environment to work in. It's it's a tremendously bearish argument. All the good arguments are bearish these days.
The logical ones are, yeah. But the market FOMO rally in tech and communications doesn't need logic. Just buy on some of those trends that have been the last month and a half. We'll see if that logic ends up prevailing, though.
Oh my gosh, the first time in something happened yesterday, Matt, for the first time I've never seen. I saw an analyst say price target downgraded to 0 on Chesapeake Energy. I'd never seen that headline. Something that it feels like I haven't seen a month. Apple is down just slightly more percentage wise than the market itself. I haven't seen that in weeks and weeks and weeks.
Mhm.
So
Yeah. Which all the way, by the way, this conversation about workers and have them in the workforce, bring up Twitter if you can. I think this is why you're going to see some of this trend that we're seeing in tech right now. Twitter announced, on the backs of Facebook saying that they can do it all through 2020 and Microsoft for their workers. Twitter came out and said, guys, if you want to work from home and if you can get your job done and your work done, you can work from home forever. We are not going to require workers to come back into the office. I think you're going to see a huge trend. We've talked about this many times, how this affects commercial real estate, office buildings, companies. I mean, here's a simple one. Do we really need cubicles for people to make telephone calls, from in a big office?
The majority of Americans have service-related jobs. Most of those jobs could be fairly easily transitioned to home.
Yeah.
If the worker is efficient, and that's a big if. Obviously, Twitter, announcing they can stay at home for the rest of the year, and maybe not even the rest of the year, like forever, right?
Yeah.
I mean, that was Twitter. I mean, this to me is not a pro-Twitter, anti-Twitter, pro-corporation, anti-corporation. This to me leads to concern, something that we've talked about in the halftime report before, commercial real estate, guys. I think this is going to be a growing trend, because if companies are going to have additional cost, like Mark was talking about with, protection and preparation and cleaning and making sure that their factories are safe for manufacturers. I mean, that they're going to incur additional cost in those environments. They're going to look to cut cost in other environments, because margins are really, really important to corporations when they're selling a product or they're selling a service. So is this an area of the market that they can cut cost and still maintain efficiency? Again, I think it's an argument that's probably going to win out in the boardrooms. I guarantee if I was hired by as a consultant in some S&P 500 company and I made that argument, I promise you I can make a very, very, very compelling argument. And I don't think I'm the only one there. And so I think this is going to be a growing trend, and how that impacts commercial real estate is really kind of the open question, in my opinion.
Mm-hmm.
Tim, listen, I love what Twitter did. Let them work from home. I love it, love it, love it. Tim, for our little game, I just sold a 21 naked put on Twitter expiring in June. So there's
what was
another
the
one.
What did I set the over under at? 13.
We set the over under at 12. It's going to be a
12.
7 on Friday. So there's
Don't
there's
count
another one.
dude. Don't count your chickens before they're hatched. We still have 2 days. All right. So yeah, but you're looking at 7 by the end of the week. If
and listen, and when I sell naked puts on companies I want to own, like part of the thing is if I get put, there's that support level, the lows that got hit in March.
Want to own Twitter? Like, what is it about Twitter that makes you want to own Twitter?
He doesn't. He just wants to win this contest.
I know, but again, the concern I have is, selling naked put. I mean, you should only sell a naked put, and agree or disagree, guys. You should only sell a naked put on a company when you want to own that company.
And not only do I agree with that, I'll up you on that you want to own the company for a long time.
So why do you want to own Twitter?
All right. So in this market, the type of companies, Twitter falls under the general internet companies that I feel comfortable with. They have general reasonable sentiment.
On performance, by the way.
Dude, performance doesn't matter to me right now, because it doesn't matter to anybody. It
does matter. Are you kidding me? You have the haves and the have-nots. It's your entire argument for the last month.
I know, and Twitter belongs into the general haves on the lower end, granted. But if I can pick up,
very similar to banks and industrial companies, has not performed the same way that other companies like Facebook have owned. That's like saying I want to own Under Armour over Nike.
Well, here's the thing is the valuation. David Tepper came out amongst one of many rich guys. I love the Trump quote where it's like, these rich guys bagging on the market, talking about the overvaluation. I'm not going to buy Apple up level. I can't get Apple at naked put levels where I can do anything with it. I can see Twitter stabilizing. If I own the shares for years, I'm fine with that. Twitter's not going anywhere. Twitter has a huge brand name. Listen, once again, this is not a fundamental argument. You're not going to hear me to say fundamentals. Twitter's going to lose money this quarter. They're probably going to lose money the quarter after that. And they're probably going to lose money the quarter after that, with ad sales just falling through the roof. I think I can make this trade work. I think I can make this position work. That's what I'm doing. I don't love it like I do oil. I mostly like doing it because I'm willing to risk losing money so I can irritate the two of you. So Twitter, $21.
Again, you should only sell a naked put on something you're willing to own, and I don't understand your fundamental argument.
I don't have really a fundamental argument. It is a multi-year sentiment.
You have an anti-Tim and Matt argument.
You know, so
He thinks Twitter's one of the cool kids. The market will buy it up if it goes down. That's basically
plain
that's
and
what
simple.
He
Plain and
thinks that the
simple
Wall
fact.
Street managers are going to have to dump money into something.
If Twitter's the new fad, that's fantastic. How about you go over and take over the Trading Justice Twitter account again?
Yeah.
Twitter.
No, they
Twitter.
would label all of my tweets inappropriate and offensive, and I'd get banned in 4 days anyways. So,
Matt, we talked about that yesterday. I don't know if did you see that headline that Twitter's doing? If
Oh,
they
yeah.
think, yeah, I mean, you've got some really weird stuff going on social media these days. There's no doubt about it. Next one here, I want to talk about Pfizer. Actually, some interesting news on the vaccine front. PFE, they've got 4 trials that they're moving through pretty quickly here, guys. They think they might be able to get something on the vaccine side by the end of the year. Now, that doesn't necessarily mean
not
that
only
we
the end of the year, Tim. I mean, they're already doing human trials, human testing here on those 4 vaccines, and the headline I read is they're hopeful by October.
Well, and here's the thing.
Cody, are you there? Cody might have taken a step away. I want to get his take on the timing on that. But I took that headline as a real positive, though.
It is a real positive. You know, the whole point of flattening the curve that was being presented to everybody out there that I bought into and still believe in is that we wanted to give medicine the chance to get ahead of this a little bit, start working on treatments and vaccines and all that kind of stuff, right? And Pfizer now showing me, hey, guys, I mean, we got 4 vaccines in trial. They might only have a couple million doses by October, Matt. So it comes down to who do you give them to, right?
Well, yeah, but they also talked about hundreds of millions of doses by next year, though.
Yeah. Mark, I mean, this would be good if you get virus news like this, where medicine is at. Let's not bring in the skepticism here, but let's say it actually does happen. These are the kind of headlines people do want to see, right, Mark?
Well, but there's diminishing effects to it right now. If something real came out, but you're starting to see antibody headlines and vaccine headlines, the market the first time the remdesivir came, the CNBC people were jumping around thinking that it was Christmas, that the whole world had been saved. There's this like fatigue effect that these type of headlines, unless it's truly genuine, unless it's gotten back by, there's a fatigue on this right now. And so I think they're less likely unless something comes up. Now, full disclosure, I have a naked put already that I sold last week on Pfizer at 31. Matt, could you get behind Pfizer at $31?
Honestly, at this point, with your naked put on Twitter, it just makes me question every naked put you have.
No, they keep expiring worthless though, right? And I'm being cautious. I am not
Yes, you have
overextending.
90% probability. Most of the time, they're going to expire worthless. That's how probability analysis works. But what in that 10% chance that the market does, in fact, have a tank, and you have to take possession of all these naked puts?
Would you take possession of Pfizer at $31?
I could sign up for Pfizer before Twitter. I'll tell you that.
100%. I did. The Twitter thing was just nonsense.
How am I the oldest justice, and yet I'm 22, and you guys are like 76?
Listen, if you want to act like a new investor, that's fine. We'll use our
Pfizer makes money, and they're providing a healthcare response that's going to be much needed and probably profitable for a long time for them. And they pay a nice, healthy dividend for an investment thesis. Being willing to own that instead of a debt-driven tech company in the face of the worst recession in 70 years. Yeah, I'd rather own Pfizer than Twitter.
Yeah, I'd rather own Pfizer than Twitter.
But maybe I am old, Mark. I'm an old soul. I like the boring fuddy-duddy stuff on the investment side. On the trading
tell you right
stuff,
now, I can't sign up for naked puts right now in the market condition when there's so much uncertainty from an economic, technical, and fundamental perspective, not to mention a behavioral perspective. I'm willing to own stock when Warren Buffett's willing to own stock, and that's when PE ratios get.
Well,
to the
that's going to
point
be
where they have to-
2027.
You don't know that. You don't know that. But I also don't feel the need to do something just randomly, like Scylla Naked put on Twitter. When the average dividend payout in the S&P 500 is 6%, that's when I'm willing to talk about value investing and actually putting those chips into the middle of the table. No, Pfizer at 31, maybe 30. I could definitely understand that argument, and I can definitely understand picking up a quality company, a dividend paying company like Pfizer at $31 to $30. Absolutely, I couldn't argue with that. In no capacity could I argue with that.
By the way, Cody, you let me know if you're back there, young man. I got a question I do want to ask you as well on this. Trywen asked a question, Coach Matt, I don't understand. They don't have treatment for COVID, but how do they make vaccine for the virus? I don't know on that one, I don't think we know here, Matt. We read the headlines.
I'm back here. The answer is that a treatment is not a cure. So it's containment. So a treatment
is not a cure either, right?
But you're not attacking the underlying cause of the virus. The virus itself is the cause. We typically treat the symptoms until the body can overcome.
Hey, what do you think about
and that's the antibodies, right, Cody?
Yeah, well, yeah, the antibodies are little signaling things to your immune system saying, hey, kill this thing. So yeah, when we talk about antibody testing, that's allowing our body to build up the immunity to the virus or the defense to the virus.
And correct me if I'm wrong, but that's how vaccines work, correct?
Also correct, yes.
Yes.
Vaccines are a synthetic form of the antibody that, whether it be an inoculated virus or just a piece of the
I'm just going to recommend everybody watch Contagion. It's on Netflix, I believe. It's a 2011 movie. Every one of us will be smarter talking about this.
Contagion has been priced into the market. So.
I want to pound my head against the sand.
Hey, what do you think about the British government preparing?
Matt, you wanting to pound your head against the table is priced in.
What do you think about the British government preparing its citizenry that we need to prepare that a vaccine never comes? They've started to do that of their health. Boris himself has been saying that, like preparing the citizenry, like, listen, we need to face a potential life with
that's
no
possible.
vaccine.
That's possible. I mean, we don't know these vaccines will work, by the way, and there are many different strains of flu. It's very possible we just have COVID as a part of our life for a long time.
Cody, what's the probability that our amazing healthcare professionals do not come up with a vaccine in the next 2 years?
In the next 2 years?
Yeah.
I'd say it's greater than 30%.
So the most likely scenario is we do get a vaccine, correct?
Yeah, with the amount of effort you're seeing from the number of countries, government labs, private labs that are all working together and sharing information, the probability is that we're going to get a vaccine.
Yeah, I do believe we're going to get a vaccine, and don't get me wrong, I understand, Boris Johnson and other governments preparing their citizenry and all of that, but at the end of the day, I truly do believe our healthcare professionals in their expert wisdom will come up with a vaccine.
I hope so. You got the best minds in the world working on this stuff right now.
If it's not, then nobody should buy this market in any capacity.
Well, by Zoom, I mean, life goes on. Like, it does. I mean, isn't this like long-term virus outlook kind of reflected in price action lately with Zoom and Teladoc and, this space where money just keeps flowing into it, realizing that this might be part of a new normal?
I don't know. And I think it's an open question. But to say the last month is the predictor of how this market's going to perform in the future, I think is a mistake. I really do. I don't get me wrong. I understand the momentum of the market, the momentum in those stay-at-home stocks, the momentum into, growth type companies, but this is not the first time in human history we've seen momentum go into growth stocks. It's happened many, 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 many times, but it's the value stocks that maintain long-term.
Yeah. They've just been really underperforming right now,
Matt,
obviously.
you didn't get the memo. The value investing is dead.
Well, again, I don't believe it is dead in any capacity, nor do I believe it's been dead over the last 100 years, nor do I believe it's been dead since the great book, The Intelligent Investor, was written in 1952.
I'm gonna create an ETF. I now have a goal in life. I'm gonna create an ETF, and the ETF is gonna be called MATT, and it's all gonna be comprised of stuff Matt hates. So.
Dude, every short-term trader is.
You go invest in Goldman Sachs and Deutsche Bank then.
Oh,
Enjoy that.
you don't think that ETF is going to be comprised of 33% USO contracts?
You are literally going to be the worst fund manager.
It's going to be Bitcoin and USO.
If you're gonna do it, you gotta make it 5 tickers though. So it's gotta be MATTJ.
Well,
Make it a 5 ticker.
Oh yeah, because Matt hates 5 ticker symbols. Yeah.
you got to get CMG in there, by the way.
I'm
sure we can make a pretty fun list. There's no doubt about it. Just for me,
You gotta have Goldman Sachs in there.
Goldman
General
Sachs.
Electric. Yeah. Couple more companies here I want to talk about. Boeing, more bad news by the airline.
Yeah, add Boeing to that list. You guys can go buy all those really, really bad things.
Little shelf down here, Matty. If you break, you got some downside. I mean, that's a bearish chart. Anybody in there, with 2 eyes can see that. There's no question about it. Boeing came out today and said they had 0 orders in the month of April for new planes, more fundamental pressure. The CEO.
Form though. I mean,
0 orders. That's so funny to me.
0.
I mean, they had no orders in January as well.
That's
In
twice
fact,
this year.
They had a negative drawdown.
All right,
in,
here,
January.
Matt. Would you rather? All right.
Oh,
I
Lord, I hate this question already.
Would you rather? All right. So I could get roughly the same value. I'm not going to do either one because I don't play in these spaces right now. I'm going to wait for a really big discount. But I could get a comparable amount on a naked put at $65 for Disney that I could for Boeing. So both naked puts at $65, and I'm not going to do either. Don't advocate. I don't like either space right now. I think you have to be really cautious in both spaces. But if you had to gun to head, naked Disney at 65 or Boeing at 65.
I want to touch Boeing with your money.
So that's a Disney, I hear.
Yeah, I mean, why would anybody touch Boeing here?
Well, I mean, the argument is that, even if they never sell another plane to that, they have all of the aerospace defense. They're going to still sell to that. I'm not saying I buy the argument, but that's the argument.
Bad argument, though.
But the old
no
argument,
new orders, guys. Even Airbus took some orders this month. It was only 9.
right.
It wasn't exactly like a robust number here, but Boeing sold no planes.
None. 0.
What else does Boeing do?
Defense equipment, I guess. They've got a bunch of stuff like that. But I mean, here's the thing.
It's all revolved around planes.
Yeah. And also government money, Mark, on that side of it.
No planes?
None.
Negative orders in January?
Yep.
Still have the 737 MAX situation?
Yep.
In an economic environment where nobody's traveling and airlines are cutting costs around the board and planes are grounded. They can't even use their planes as they have them. It's not like Southwest, which is one of the bigger 737 buyers out there, is buying 737s right now. I mean, why in the world would anybody touch Boeing?
I wouldn't, but I think the argument would be the government's going to bail out Boeing. They're a defense contractor, and eventually it's going to be up because, by golly, it's a too big to fail company. Now, here's the problem with that.
But even Boeing has said they're not willing to take the government loans if they come with restrictions.
Well, and frankly, I don't think the government is going to be that willing to give them money in the future. As we move further through this, guys, it's obvious that government just ponying up money is not going to be like it was a month ago. You had that reaction, you had all those packages being pushed forward, money coming out. I'm not so sure.
I don't know. I'll tell you right now, a short underneath 120 makes a lot of sense to me on Boeing.
Yeah, no, I agree. I think you've got a little level there. You could absolutely trade that to the downside if you break down just on a trading opportunity. A couple more here.
And again, I get it. The revenue and earnings and EPS numbers and dividend and value and valuations and PE ratios and forward PE ratios and PEG ratios and all of that does not matter to 10% of the marketplace that is skyrocketing. I get that. But again, why would you buy a company that doesn't make any sales on the primary product that generates the revenue?
Yeah. What is Boeing's PE ratio?
So I'm taking that's a Disney then is your final answer.
Yes, I didn't have to say Disney, but
All right,
yes.
got one more for you. I like
Negative
this game.
22, Tim.
Listen,
A
I could do
negative
this game with
22
Matt.
PE ratio for Boeing.
I could
Wow.
do this. I could do this game with Matt all day long and find immense enjoyment. All right, two companies with comparable prices right now: Facebook and Clorox, both at around 204 to 207. All right, you got to go buy 100 shares today, Matt, or sell a naked put at 180, or however you wanted to play it.
Dude,
All right.
this is
Which
like
one?
bracketology.
Naked puts are cheating. I mean, that's cheating analysis
No,
because
but
you're like,
no, but
I'm going to sell a naked put, but 10% of the time I'll take position.
no, but
Buy
maybe
the shares or not buy the shares.
No, but maybe your value is like, okay, so buy the shares or not play the shares. Clorox or Facebook.
I would rather buy into the strength of Clorox right now.
What do you think about, like, I've treated Clorox recently like I do gold, because I don't think the virus is ever going away on some level, vaccine or not. I think there's a chance we don't ever have a vaccine. At a minimum, I don't see human behavior changing for years and years and years. We might be facing that. I'm starting to look at Clorox like gold, which means on pullbacks, just like I would gold. What do you think about that line of thinking?
I think your analysis on Clorox being more like gold makes far more sense than Bitcoin.
I'm so just buying some shares of GBTC right freaking now. All right.
Listen, the worst analysis I heard around Clorox, Mark, you shared with me the other day, not from you, but somebody had said it, that Clorox is only getting a bump because of the lockdown. And I'm just thinking, no, every business in America is going to have a sanitizer in their business more. You're going to have to provide that kind of stuff. There's no question about it. Clorox is a great looking stock coming out of all of this situation. Facebook, if you ask me though, out of those two, Clorox or Facebook, give me a chart on Facebook, Matt. We played bracketology on the podcast the other day, so this kind of like
I love this game. Like, seriously,
Yeah.
I love the would you rather. It makes you think through things, right? That's why I love it so much. Is you're like, it makes you think through I love it.
Ad revenues will be lower on Facebook, but you're going to have a lot of action here, obviously, with people at home in the presidential election this year. It's a little, and I actually think from just a timing perspective, I probably would still take Clorox. I think the downside risk on a company like Facebook, tech is not immune to another sell-off here, guys, right? I mean, everybody's assuming tech is just going to completely be sailing up the charts forever because everybody loves these tech companies. And I know tech is the strongest area of the market with communications, but I don't think they're immune at all. I mean, you could absolutely see another move in tech at some point here. That's my opinion.
All that has to happen is you have to break the backs of the retail investor who are very fickle, right? If they don't think that they can make easy money anymore, you could see a pretty.
Oh, it's a great point, Mark, because the retail investor, if they have one day losing, even if they've had a week of winning or a month of winning, 1 day, 2 day losing, they're like, oh, this is just a rigged game.
Mm-hmm.
Yeah, no, the retail investor could get, if you break their back. Yeah, tech is, two things are fueling tech right now. You got retail investor momentum, fear of missing out, and you got institutional money trying to find anywhere that's safe, right? If it's like, oh my gosh, I hate everything, but I like these 30 stocks. Let's go pile our money into there. If you get like sell and sentiment break there or the retail investor, I don't know. There's a long way down on those charts. That's all I'm saying.
Adam has the best comment I've seen in a long time here. If you're a long-term member of our community, you'll get this one. Adam says, I think Tim should just complete the cycle for pissing Matt off today by bringing in a question from Cora.
Oh, that would be a great ticker symbol. QU. ORA, that's my ETF. I'm going to put it together, right?
Well played, Adam.
The Bitcoin gold argument got me going here today, Adam. And no, Tim, don't do it.
Pissing Matt off is good theater. right?
Oh,
So like,
I'm having fun. A couple more I do want to talk about here, guys, as we're winding down towards our next segment here. Real quick, MGM Casinos. I thought there was really interesting commentary out of the MGM CEO here. They were talking about reopening, and it looks like they're going to reopen some of their casinos by late May, early June. And his opinion was basically this: is going to happen in waves. He does not. He thinks it's like a third wave on human behavior. Mark, he said, I think a third of the people will come right now because they're not worried about it. And I think a third of the people will come at some point where they get clarity on the medical side, maybe later this year. And he thinks a third of the people might not come back for years. And they might not see them in Vegas until like 2022. Now, I thought that was very, very smart. I actually kind of agree with him. I think people are segmented right now on how they're approaching situations like this. Casinos at 1/3 capacity, though, they don't make money, do they?
MGM has, I don't have to go anywhere else but the source themselves. They have said that they estimate that they have to even justify opening the casino and not losing more money than they do today. And I think this is the same for a lot of businesses like this. Their business model isn't set up. They said to not lose more money than we're losing today, and they're burning through a lot of cash today. They had to be at a minimum 30 to 50% by their estimates capacity on a casino. And then they said, well, what we'd probably do is you're not going to see the strip all open up at once. You're going to see a few casinos. MGM's not going to open up all their properties for that reason, that they're going to need to filter their customers into one of their properties. The strip's not going to all open up because they can't make money. I mean, and you see anecdotal evidence of this all across the country where shops are saying, we're not opening up. We're not giving up the free money to cover employee costs because we're not going to be able to make money even if we open. That's a real issue. That is a real issue, that even if you open up, but it's only a percentage and companies literally are losing more money, that's a nightmare scenario. It really is. You got to have that 2/3, or you have to. It's just listen. This whole thing's a freaking mess, right? There's not an easy way out. Powell basically was saying that today. This is a very long process. It's a mess. That's why Twitter doesn't have to open up and worry about those issues, Matt. Like I wouldn't sell a naked put on MGM at $5 right now. Like I gotta see that. I want to sell it on banks right now because these things are hated. This is a mess, man. It is so hard to know how to navigate. Probably the best advice we could give to anyone is trade what you see, do your technical analysis, day trade, do really short-term swing trades that set up. Those have been pretty decent recently. Saw tech have short-term trade setups that if you had those quick targets do really well over the last month. Breakdowns that you've seen in Wells Fargo and Caterpillar, stocks that set up. Tim, I've heard you and Noah talk about that Caterpillar setup for days. Don't necessarily go for a home run, but those good old-fashioned step system swing trade setups have been pretty decent as long as your quick targets, not going for a massive home run, being in and out in a couple, 2-3 days,
or converting it into a spread. Yeah.
Or convert it into a spread. Like,
Noah's going to teach tonight. Yeah.
That Noah's going to teach tonight. There's ways to handle this market, and they're really successful. And tonight, that's a great lead in because I wasn't even intending to do that. But Noah talking about like converting and management techniques that you can do in this market. There is a real way to play this market that doesn't involve lobbing naked puts down and making a few bucks from a short-term trading standpoint. We've seen so much evidence of how this market behaves. The bulls will have another run. Those setups start developing in the next week, right? Maybe not. Maybe the bear setups are dominant. We don't know that. But one thing we do know as traders is that if you wait for your signals, exercise discipline, don't go all in, be cautious. This market has been fairly consistent from a technical analysis standpoint the last month. So traders, keep being disciplined and looking for those setups, be willing to play both ways.
Well, I think And
Yeah.
here's the thing with the MGM news as well, and I think it really does unravel one of the bullish assumptions they've been making for about a month and a half, that if the economy opens back up and businesses reopen, that everything's going to be fine, right? There's all this pent up demand and everything. Even
Nobody
MGM
believes that
knows
anymore.
nobody believes it. I mean, that's not going to happen. You might see some demand come back, but these companies are nowhere near out of the woods, and casinos are right on the front line of that. They would need people to come back to be profitable, and they don't think they're going to come back anytime soon. So that chart is reflecting some of the ugliness in that commentary a little bit here. And great analysis there, Mark. Guys, let's move into our coach's corner here. A real quick one right at the end of our show. By the way, if you're watching our show right now, always appreciate you guys. It's great to have you out there. In the chat, just type in where you're watching from. I'm always curious about this, where our community is from out there, across this country, across this world. We have a global community in many, many different ways, and we appreciate everybody out there on Team Tackle. So let me know where you're at while you're watching the show. A couple of other quick things. Give me a thumbs up if you do enjoy what you're seeing, and let's get the analytics out there and share it, get it out there. Let somebody else know what we're doing over here at Tackle Trading on our YouTube channel. Coach's Corner, Matt, there's several things I'm interested in that I want to talk about. Give me a look at CRM if you can. Couple things I'm watching, and what we do in this section is we kind of just talk about a few things we're interested in. Now, this is nowhere near an entry, but I'm going to be watching a pullback on this through this week and into early next week. See if those moving averages can hold old resistance. CRM is on the Cool Kids team, and out of the bulls, I've always been a fan of this company. It's not near there yet. We're down on a big red candle, but just a watch list candidate on that one for me. Amgen. A couple of the healthcare stocks grabbed my attention, and you got a high base up there. If healthcare decided to come back and make a little breakout, that's something I'm paying attention at that 245 level up on the top. Regeneron, which has been one of those hot, REGN, I believe, got a couple letters backwards there. There we are.
That's a nice looking chart in
Yeah,
itself, though.
the other one is nice too.
Oh, that's a pretty chart. Oh,
Just
that's a
look
pretty
at
chart.
that. Beautiful high base kind of setting up there. And then for me on the downside, I have to bring up this stock, GE. I'm not in a trade. I'm not going to short down here. It's too low for me. There's other ways to play the industrial sector that Mark's been talking about, but just the lowest price on GE since 2008 during the crash.
Oh, you just wanted to declare victory.
Dude, I won this one. I've been winning this one for a long time. This is a fundamentally poor company that's continuing to be under pressure, global production, making stuff that's really expensive. I mean, just think Boeing and GE's right there, but GE also has tons of debt and been poorly managed for decades. So just ugly, 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 ugly. And Matt Knock still. This is a tough one. I want to get you guys' take on this. When you think a company is a fundamentally good company, but charts are breaking, do you have ever any hesitation about still taking a trade to the downside? Because I love this downside potential just chart wise,
Confirm under 320. No.
just for a trade, right? Just trade it down. Yeah. I think step system kind of confirmation would be needed there. And there's a bunch of other ones, but Morgan Stanley, one in the financial sector, I would like a little break there. And then I think you got a nice little reward to risk setup if you can get confirmation under that.
Those are all some really nice charts. Like if you're watching this right now, and I don't advocate this very often. In fact, once again, in a week or first, Bitcoin lobbing naked puts just to make Matt mad. I'm going to advocate for the first time.
Lob a naked put on Bitcoin. It's impossible.
Well, I know I'm not saying that, but on Twitter. But go rewind the last 90 seconds and hear Tim talk again. Those were some really nice chart setups. He did a really excellent job finding some really classic technical analysis charts. Rewatch that last couple minutes again. There's a lot of nice setups there.
Well, this is also the chart setup we're seeing with potential shorts. It's the thing we saw in MGM. When you're looking at MGM, I mean, MGM had a, decent short-term trend, higher highs, higher lows. But once that failed support, what you see an 8% drop in price, which with a potential target down to $10. I think that's a wonderful short type setup. When you're looking at Morgan Stanley, this is the chart that I'm seeing predominantly on the potential shorts, where you had the initial recovery that the market did, but it underperformed the market. then you start to see these double tops, double bottoms start to form. You start to see support levels start to form, resistance levels start to form. You start to see these short-term moving averages start to roll over as well. And once those violate support levels, watch those stocks drop in price. So this is the chart setup that I am seeing in the market today that is potential shorting opportunities.
Boy, these intraday charts are ugly right now. Like they are all setting up. Like, you know, it's one of those things.
Yeah, but let's not overthink it till it breaks support. I mean, the S&P is still holding support. Believe me, I've been on the bearish
Listen,
side of
I'm just
futures
saying
for a
right
long
now,
time.
from a technical standpoint, I'm talking to the team members out there, Mnuchin, Kudlow, Trump, you know, like, yeah, I'll need to get out there and lie about something because these intraday charts are really ugly. All right. So go make up something, you know, I don't care what it is, you know, so it's really,
Well,
really
the
ugly.
amazing thing, guys, if you look at the last month of data, just from a technical perspective, right? And let me pull up a monthly chart here real quick. But if you look at the last month of data, in all the news, in everything we're dealing with, the market is really just stagnated. In everything geopolitically, everything healthcare wise, the market has really just slowed that the momentum down that it's had. The weekly charts look ugly, the daily charts look ugly, the monthly chart, when you look at it from a long-term perspective, doesn't look good. So yeah, I mean, it's just
stay on that
fascinating.
chart for a minute.
It's fascinating that we've seen so much data come into the market, both geopolitical, economically, and earnings wise, and yet the market in the last month just kind of hanging out.
You gotta pull up that monthly chart again. I mean, the algo studier that I am, go pull up that chart again. That 20 monthly period moving average, 20s on weeklies and monthly charts are, in my opinion, one of the most underrated indicators in analysis. We almost never look at them. And you notice where that ceiling hesitated at. Right there at the 20 monthly. Like, you know, that is not a coincidence. You know, that is not a coincidence. So,
Well, and not only that, Chuck, but when you look at it from a long-term perspective, you know, going back out to 20 years here, you didn't even see this chart setup happen in the subprime. You didn't even see it happen in the .com. You're seeing a head and shoulders start to form on the monthly chart right there at 3,000. If this market cannot reclaim 3,000 in the short term, I'm very, very nervous for this marketplace.
yeah, I would 1,000% agree with that. I think that's an underlooked at chart. I think it's a very significant chart. I think it carries a lot of meaning. And listen, it's a crazy market, right? You got the FOMO traders and institutions piling into tech. Everything else, it seems, outside of pandemic plays are getting killed. The bearish arguments, it's like this week, and I shared them with you and I did them in my prep class, like the 21 bearish arguments I heard last week. All of the arguments are on the Fed. Powell basically encapsulated some of those arguments this morning. This is a real freaking mess. And if you don't,
the bullish argument revolves around one thing. Would you agree? The Fed has to continually act above all things. I get the government can act. I get all that. I get we can get a vaccine, but I've long held the belief, even in this pandemic, that this COVID-19 situation simply unmasked some of the underlying problems from an economic perspective. It didn't create the economic problems. It just simply
it was the match. Yeah, it was the match to a pile of dead, dry weeds, and it just went. You know, there's no question about it, Matt. It was the needle to pop the balloon. Any other bad analogy I can use now to describe it, but it was just the trigger. It was the catalyst.
Tim, it's not like we were growing at 3.5% GDP year over year over the last 10 years.
No, we already saw GDP contraction from 16 to 17 to 18 to 19. In fact, there's a lot of evidence that the GDP growth we had in 17 was just because of the corporate tax cuts, and we were contracting, and we were already complaining about the national debt. So I get that. I think the bull side of it, though, they're assuming a vaccine and treatment and life will get back to normal. So I do think that is a big part of their assumption. So if these vaccines,
but even most corporations and most governments and most central banks around the world are changing their tune on getting back to normal.
But
they're redefining what normal is.
and I'm going to call BS on the bulls. They don't believe that. Why is
don't
Wells
believe it.
Fargo at 10-year lows if they believe that that's the case? I think what has happened over the last 2 to 3 weeks is a systematic move into tech because okay, first of all, FOMO traders pumping it up, right?
Yep.
Because, hey, we're making money. And a systematic move, and Tim wrote a daily email for Tackle Trading yesterday, Matt, on sector rotation. I think that's absolutely, but I don't even think it's sector rotation. I think the sector is pandemic plays and tech, and I think money managers are finding anything that they can store value in because everything else.
Think about those money managers, though. They lost their clients a tremendous amount of money coming in from December, January, February, March type area. If they don't chase the dragon and show their clients that they've recovered some of their money, their clients are going to pull their money.
Yeah,
that's what a lot of that. That's what a lot of this is going on, guys. It's just people trying to chase ROI.
Yeah,
and that's why I constantly say data matters, economics matter, debt matters, money supply matters, revenues matter, EPS numbers matter, and I think it's absolutely foolish in the long term to discount that type of analysis simply by trying to chase the dragon short term, because money managers are trying to show their clients that they've recovered some of their losses. That is not a bullish thesis, not in any capacity. And in my opinion, and again, this is just my opinion, but I think that what this recovery has truly done, guys, is allowed intelligent investors the opportunity to protect their investments by buying put options on the S&P 500 as an insurance policy.
We talked about that yesterday, Matt.
Yeah.
We talked about that yesterday. Listen, during this whole time, you two have been extremely bearish, and I've been a cowardly bull that supports all of your bearish arguments and afraid to chase. It is hard to, the bull argument has been, hey, one day, 2022, everything's going to be great. EPS numbers are going to come back. Maybe it's 2023, but eventually will. Nothing bad will happen between now and then. And so let's buy at record high valuations, because valuation doesn't even matter on Apple and Facebook anyways, because it's just a store of value. That, and I'm not even exaggerating, that has been the essence of the bull argument. And it is a terrible argument.
Well, it's also an argument they've been making for many, many, many years, that tax cuts are going to pay for themselves because of increase in revenue. Did we see that?
No, we saw.
Okay. Did we see, tax cuts are going to benefit the worker because the worker is going to make higher wages? Did we see that?
Not at the rate.
Okay. Yes
or
no?
Go up. They did go. Wages went up a little bit.
Okay. But not as much as corporate benefits and CEO pay structure did, nor stock buyback programs or increasing dividend. So so the argument we heard a month ago was, oh, this is just a short-term hiccup, and all of a sudden, from an economic perspective, we're going to be back up and running in 3 months. We're a month and a half into that. Have we seen that?
No.
Every single one of these projections have been wrong, have been absolutely fundamentally wrong. And the simple reality is this: they're making stuff up. They're making stuff up because they want you to buy something. Wall Street is saying buy, 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 buy. For what reason? Because they're trying to sell, 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 sell. The government is saying, everything's going to be hunky-dory and everything's going to be wonderful in the future, because they want you to go back out there because they have an election in 6 months from now.
And that's why you got to appreciate Jerome Powell's speech. I know we bash on Jerome Powell. I think it is required YouTube viewing by law mandate that anyone talking about the stock market bash on Jerome Powell. We got
He's
lots
also
of
a liar, Mark.
I know. We got lots of ammunition. But one thing I did appreciate is that was not a rosy speech. That was a very dire speech this morning, talking about the realities that the economy, in very placid terms, right? He wasn't doom and glooming. But when you analyze the speech, it was a terrible outlook on what we have ahead of us for our economy. Terrible. It wasn't painted with rose-colored glasses. It wasn't talking about nonsensical V-shaped recoveries and pent-up demand. It's saying we're going to need a lot of money. We can worry about debt later. Now, that's a whole separate argument, right? But it was It painted a very bleak.
I understand that, but he also said that we're not going to go to zero interest rate policies. We ended up going to zero interest rate policies. He also said that we're not going to start quantitative easing yet. We've seen the balance sheet increase by $2 trillion. He also said we're not going to negative interest rates, but I guarantee you at some point in the future, we are going to negative interest rates. I respect Jerome Powell for what he said today, because I think he spoke the truth. Whenever he speaks, whenever you hear a speech of Jerome Powell, you see the hawk. You do.
It's funny.
You see the hawk.
And for traders that weren't around in 2018, it was the easiest short in the world, because all you had to do was short the market before Jerome Powell spoke. And it went like, that was like 9 speeches in a row, because he spoke and the market hated everything he had to say. It was like 9 speeches in a row. It was just amazing down. But
that's Jerome Powell, though. When he speaks, he talks about what he personally believes. I truly do believe that when he speaks, he talks from the heart. He talks about data. He talks about economics. You hear the hawk in his voice. But tell me one policy that he's actually voted on since his coronation, and I mean that wholeheartedly, to the central bank president, where one policy where he has not been a dove.
No, he's capitulated at every turn.
Jerome Powell is a coward, is what he is.
In early October,
he knows the truth, but he refuses to actually apply it. Jerome Powell is an absolute coward.
I agree with that. And I hate bashing on a man that I'll never meet personally. I like bashing on someone when I at least can look at them like you two and just make fun to your virtual face. So I hate saying that, but that's what I believe too. I think he has went against his core principles for the last 18 months. And I think he will capitulate further, because that's who he's shown to be when push comes to shove. Jerome Powell, I believe, thinks that there is some really, really bad stuff coming. Right?
Everybody does. Everybody knows it.
The exact same way Bernanke thought some bad stuff was coming down the road in February of 2008, when he gave his infamous speech about how there's no risk to the subprime market. Right. Yeah. The same way Alan Greenspan talked in 98, 99, how irrational exuberance, does not remain as solvent as the marketplace. Okay. When people trust the central bank on what they say, they're making a big time mistake.
God, these financials, even AIG down 6%. I mean, hey, Janet Yellen, would you like to take back that we're never going to have a financial crisis again in history statement that you made a while back? Like, and people like to spin that this isn't
never going to see a recession in my lifetime, is what she said.
Janet, like, and people are like, well, this is a healthcare crisis. Like, listen, I think this is we're going to get back to work, and it's going to be a financial crisis. I think it's going to expose the underpinnings of a corrupt financial system. And obviously, I think a lot of other people believe that too. Look at the bank act.
Here's the problem with the central bank guys and listening to these individuals speak. Just last week, you had 2 central bank people. One was Bullard. I can't remember the other guy's name. The central bank president from Chicago. But they were talking about how the labor market was going to get back to 5% by the end of the year. And then all of a sudden, Jay Powell comes out this week and says, oh, this is an absolute unmitigated disaster. I mean, they talk out of both ends, guys. And if you don't think this is coordinated, this is absolutely coordinated from the central bank.
Yeah. I've been saying that for a while. And by the way, I read an economist saying he thinks it's going to be 10 years before the labor market is going to be
anyone
back
who
to where
thinks
it was.
that, like, listen, you just need, if you want to learn to tactically play this market and trade this market, perhaps the wisest advice we could give, and I think I said this in some form yesterday, is that, like, listen, if you just want to suspend your investment part, whatever, and just trade this market, that's probably not terrible advice. But if you're going to do something in the investment, you should probably be very, 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 very cautious.
Yeah. You trade the price. It's very simple to me. You trade the price and you wait for the fundamentals to come back in to invest.
Unless you have two
That's my
brothers,
take. Yep, that's my
unless
take.
you have two
100%.
brothers on a YouTube show that you can lob naked puts at to piss them off. That, you know, that's the only exception.
We'll see if you get to 12.
I mean, your bullish thesis is let me sell a 10 delta put option. You call that bullish. That's not bullish.
Hey, $20
If you're
spends 20
actually
bucks.
bullish, if you're actually bullish, buy the shares.
That ain't gonna happen. This market
Exactly, because you're not actually bullish. You've been this fake member of this so-called team you've conjured in your head that thinks selling naked puts is part of the bullish thesis. It's not.
I can explain it real
You're
simply.
waiting for a crash is what you're waiting for.
If markets crash, Mark would be willing to own.
Yes.
Okay, so Mark is not unlike any other member of the team then.
Listen, there's two things I'm worried that
Mark,
aren't
you're the same thing as David Tepper today, right? You think prices are elevated and completely out of control.
Oh, did you see his quote?
You're the same thing as Warren Buffett. You're not willing to actually buy this market at this price level, correct?
Correct.
Okay.
David Tepper said it was the most overvalued market he's seen since 1999. Based on forward PE ratios, that's absolutely in the data, right? I mean, we're talking about elevated stock prices that are pretty extreme right now based on the assumption of what earnings will be in the future. But here we are sitting on support.
There's only two companies that I have FOMO on right now. And not even companies, areas of the market. I got FOMO on gold. I keep selling naked puts. They keep expiring worthless, right? I got some FOMO there. I got some FOMO on Clorox. I think Clorox is the new gold. Like I really do. And I'm not even using hyperbole. I think Clorox has a steady stream of increased revenue from now for years and years and years. Now anything can pull back, right? We saw that with gold 6 weeks ago where gold crashed with the markets. Anything can pull back, but I keep waiting for a pullback in Clorox the last 8 days. Ain't happening. I keep waiting for something on gold to happen, not happening. So, but everything else, yeah, give me it at crash levels or not at all.
Mm-hmm.
Although I would like to own some fast food at crash levels more than others.
You got FOMO on Burger King too. I know.
No, I buy the because
he wants a Burger King burger. You always know when Mark wants something.
And this is an actual argument people have been making. It's the anything with a drive-through argument. It's a real thing. I'm not making it up. I stole it from lots and lots of other people saying it, being like, listen, we don't know where a lot of stuff is going, right? Anything with a drive-through is going to do okay. Mm-hmm. And so I buy the anything with a drive-through argument. So I got a little bit of FOMO there. I mean, go pull up Wendy's, right? I mean, you see that argument has been playing out in price action. You know, Wendy's recovered basically to 2019 levels pretty quick. So if I can get a pullback in anything with a drive-through stock of, I've little bit of FOMO there. So I don't have to have Wendy's crash to be interested in Wendy's.
Yeah. Guys, let's wrap this one here today. Really fun, really engaging show. Quite frankly, I enjoyed the back and forth the entire time. I had a lot of fun. I think I laughed more today than I have in a long time here. A couple things I want to talk about. Number one, we have a webinar tonight right here on our YouTube channel. If you're not a subscriber yet, click subscribe, click the bell. Coach Noah is going to be teaching option adjustments at 7 p.m. And the other thing is always, we do this content to promote our community and to grow our community. If you're a pro member out there, it's great to have you. Type in pro member in the chat if you are one. We appreciate you guys all the way to the end. If you ever need something, shoot us an email, team@tackletrading.com. And if you're not a pro member, we have a 15-day trial right in the comments and the links below to where you can just come and sign up and see what we do on the back end of our community. Trading lounges, nightly shows, webinars, content, the weekend reports, a bunch of courses as well. And if you're looking even just to test something out, go check out the 7-step guide. It's a free course on tackletrading.com. Great job, Matt. Great job, Mark. Thank you, Cody. We will see everybody back here tomorrow, same time, same station.